Can you throw out maybe some examples of the institutions or the exchanges that you guys might cover so people can get like a very clear idea?
Yeah. I can't talk about specific insureds, obviously, and who we've underwritten, but just think about, if you think about large custodians or exchanges in the news, these are institutions that are like, or perceived as almost like banks, right? So custodians like say Coinbase, for example, right? They or Gemini, they allow people to typically, if you want to send fiat like US dollar, you can convert that, you can exchange it to other cryptocurrencies, and they will custody the private keys for you for those assets. So they, as a custodian, have the care, custody, control of those assets. There are other infrastructure providers. So some custodians, and I won't go into too much technical detail, but some custodians or people who go to market as custodians, they themselves may use third parties for all of the actual implementation of the custodian. They have the actual care, custody, and control that technically is outsourced to another provider. So they are like these, think of them as infrastructure providers.
Okay.
They have a similar liability, right? Again, if the private keys are lost or stolen, that's an issue. If you think about just funds, right? So if you're an investment fund, and we've seen a massive increase in the amount of investment funds seeking to invest in crypto assets. And they have similar issues that a custodian would, which is, well, because a fund and because of the way crypto assets and blockchain in general are implemented, you can self-custody. Right? You can essentially maintain your own care, custody, control of assets. So for funds, if they're doing it themselves, or if they're using a custodian or exchange, they have the same risks, which is, okay, well, what happens if there's a rogue internal employee, for example? You want an ability to manage that risk. Corporate treasuries, right? So think about large companies like something like Tesla, for example, had made announcements about owning certain crypto assets. Those corporate treasuries have the very same issue, right? Around what do we do in the event of a theft or loss of the crypto assets? And that does tie back to how they're custodying those assets. Family offices, some larger family offices, say larger than $5 million, typically are looking at investing in crypto assets. They have the very same issues around the custody of them, the custody of the assets, and therefore what type of protections or how do you want to manage the risk around theft or loss of those assets. So again, kind of recapping, you have custodians, you have exchanges, you have investment funds, you have corporates or corporate treasuries, offices, and then family offices. So and that's a relatively wide set of potential insurers. And there can be companies today who, may own crypto assets and don't even realize it. They may have made an acquisition, right? And there may be a company in their portfolio that has crypto assets. And so how do they want to custody those assets? Again, self-custody or with an outside party, and then all the similar issues around the risk of theft or loss and how is that managed?